Assalamu alaikum wa rahmatullahi wa barakatuh. My name is Ala Abdurrahim. I'm an Imam in Tennessee. I want actually to have a small question. First, I would actually wish in a beautiful gathering discussing the point of the Sharia compliant versus actually the normal banking systems, is as we are having actually like a representative of the opinion that start actually or support the Sharia compliant. I don't want to say the so-called Sharia compliant, but this is how it is. And we have to have also maybe actually another speaker supporting the opinion that actually see the permissibility. Meaning, as we all understand, that the Imam Abu Hanifa, Imam al-Layth ibn Sa'd, and many of the Tabi'een, and many of the scholars, Imam Sufyan al-Thawri, and all those names actually were no less than Shafi'i and Abu Hanifa and Malik, and they see actually the permissibility of the Muslims in the West or in a non-Muslim country going to the bank and buying, knowing the fact it is riba, but relying on the hadith of Sayyidina Abbas ibn Abdul Muttalib, who was allowed to deal with riba since he was in actually a non-Muslim society. So I would wish actually, I would actually have wished if I see that.
I'm going to try to address, I think, your point. You know, I remember in the early 80s, I'm actually not younger than Amjad, I might be older than Amjad here, but I may not look it, but in the early 80s, when my family and others were trying to buy a house, and there was an opinion that if there is no options in a Western land, that the only option, and it was a need, not just a want, but a need to buy, that it was permissible to use a riba-based bank for a mortgage. And I believe even in our time now, Sheikh Qaradawi made a statement in the mid-90s or around this time. And many masajids and other people use that as, look, we need to establish ourselves in real estate. We need to create generational wealth. There are no options. When an option presents itself, however, the situation changes. So when a viable option presents itself, and this option has been vetted by the leading scholars in the specific discipline of Islamic financial transaction laws, that it was vetted by them, they supervised the development of it, they were engaged throughout the entire process, and they've issued fatwa in support of the final product, and they issued fatwa describing all of the nuances around it, and they continue to supervise it every single year, as, for example, I'm speaking on behalf of our organization. Then you can't look away. At this point, you cannot look away, because at the end of the day, we may not fully grasp the importance of staying away from riba in our day-to-day living in the West. But riba, it is the only sin that Allah subhanahu wa ta'ala in the Quran, in Surah Al-Baqarah, states that He will wage war on you. You don't see this for other sins. He will wage war, He and His Prophet will wage war on those who pay riba and receive riba. It is such a corrosive element that you may stumble into it and you may not know that you're a part of it. And there's also, hadith of how we'll all be covered in the dust of it. So we are in 34 states, the option. If we're not in your state and there are no other options, then that thought process of in need or in dire need, then it's your decision, really. It's not my decision, it's between you and Allah subhanahu wa ta'ala and the fuqaha who've spoken about this. Similar to, for example, pork. If you're in the desert without any options for food and it's death or eating pork, the ruling on that is you want to stay alive. Allah subhanahu wa ta'ala wants you to stay alive. And so there are many other examples, but we won't go into them because I see the line is growing behind you. I hope I addressed it. Please.
Yeah. I just want to quickly add, in Sheikh Yusuf's fatwa, by the way, Ruksa, I shouldn't even say fatwa, in his Ruksa, there's stipulations that says if Islamic finance is available, this fatwa no longer applies. So we should keep that in mind. But he also went on to say this is for a need. Like a family can't get a house because they have 5 kids and no one will rent to them. And so, many people took it and went and bought apartment buildings and investment properties. This was a ruksa, and we should keep that in mind. But I'm going to stop because, mashallah, the line is long. So.
Assalamu alaikum. I have a quick question to each of you. One of them, the first one was to the brother with guided residential. So you're saying that since you don't share with the profits, so does that mean all your profits are just from the utility fees? Or your revenue, sorry, not your revenue.
Yeah, our revenue is derived from the utilization portion of that monthly payment.
Okay, so like if the house appreciates and we decide to sell, then you don't share.
No, because our consumers have chosen where they want to buy. They did the research. They located the zip codes and so on and so forth. All that hard work goes into the ultimate result of the value of the property appreciating, and even the upkeep costs of the house. It's borne by the customer. And so all of that goes back to our customer, all the appreciating value.
And then just a quick follow-up. So then when there's depreciation, your example of the 70,000, you said that guidance takes 20,000 and loss, and the renter or the owner takes 10,000. So is it not shared by a percentage of ownership?
Not if the result of this came from the customer not meeting their obligation to buy us out, meaning the customer is in default.
Okay, so the customer just loses everything and you guys take the rest.
So in the case where we have a remedial plan. I mean, especially during COVID, we issued a lot of remedial plans, forbearance plans, 6 months, up to 8, 9 months. But if it gets to a point where the customer just can't meet their obligation, and under Islamic principles, you need to meet your obligation to your partner. If you cannot meet that obligation, we have to liquidate the property. The losses that are incurred are the losses, and we can't go beyond that. We're limited to the liquidation of this asset and nothing more, because we did not lend money. Unlike banking institutions and others who are in the business of lending, where they would then be able to go after you for all the difference. In 2008, I encourage all of you to really study this, because this happened in our lifetime. The most deficiency judgments ever issued to the public by courts on behalf of banks was in 2008, 2009. And those banks were allowed to chase customers of theirs, former customers, who lost it all. They were allowed to chase them to other states to confiscate anything else they may be owning or buying, or even their income. It was a perpetual infliction of pain on customers that just didn't stop, thanks to those kind of structures.
Okay. And question for the other brother. So you mentioned that it's 1% for the income, but I thought IOFI says 5%.
I'm sorry, if I said 1%, I should be 5%. So thank you. Yeah, 5% of a secondary source of haram. Oh, what I was saying is the actual amount that we have is less than 1%, less than 0.5% even. So.
Assalamualaikum. Thank you guys for your presentation. I guess I have 2 questions for the guidance presidential. So I guess my first question is, does your utilization fee change based on inflation, or is it a fixed utilization fee that I guess on like a sliding scale?
Yeah. The utilization fee is established from the beginning. It doesn't change.
Okay. And then I guess this question is, I guess it's kind of crude, so I'm sorry about that. But I guess the utilization fee seems incredibly similar to interest in the fact that, you pay like more of the utilization fee in the beginning, and then you pay less of it towards the end, similar to where you have like a principal, and then your interest, you pay more of the interest, and then you go towards the principal. As long as kind of like the fact that, isn't the utilization fee the return that you guys get on that at the end of the partnership, or whenever you get your entire share back? Isn't that kind of similar to what your return would be on like a traditional mortgage? I guess it just seems like interest, but with a different name.
Yeah, that's a fair question, and I don't think it's disingenuous at all. And this question has been asked since the first days of our launch. And one of the points that I think we all have to remember, and I remember having a conversation with our Shariah Supervisory Board members on this, and they said, even during the development of the product, how do we price utilization? This was a discussion, right? And the Shariah Supervisory Board looked at the operators at the time, those who were going to be operating the company, and they said, this is not a Shariah question. What you charge is up to you. If you want our advice on it, be competitive, but what you charge is up to you. Similar to the individual who decides to go into the halal meat business. What he or she charges is up to them. They're going to look at the price of chicken by the pound that conventional butchers price it at, and they're going to say, okay, that's $4.99 a pound. I should be competitive. If they go up to $6 or $7.99, they're not going to be competitive. It's not a Sharia decision at that point. It's really more about, do you want this to be viable for the public and be competitive? And there were even more interesting discussions about this, by the way, because we had these internal, do we peg to the rental rates in the local neighborhood? That's not sustainable, it was discovered later, because one house could be renting for $2,000 a month, but a house next door could be renting at $3,000 a month. And the difference, same zip code, same street. One house had better amenities, newer kitchens or kitchen and bathrooms and so on and so forth. So that wasn't a scalable model. So their ultimate advice to us was this: benchmarking in Islamic finance is permissible. Benchmarking in Islamic finance is something that's been long-standing. You can benchmark. And one other thing to note is this. In Islam, when it comes to contracts, the ends never justify the means. They never justify the means.
I guess I was more interested in kind of like the fiqh aspect that differentiates between like whether you're calling it interest or a utilization fee, or what other type of method we could gain to make some type of revenue from it, right?
Yeah.
What's like the fiqh difference between calling it utilization versus interest?
Well, the fiqh difference is about the contract. It starts and ends with the contract. They look at these contracts. In our case, the development of it was literally with them, with their involvement. And the contract has to stipulate that the two are not borrower and lender. The two, there's no selling or buying of money back and forth between each other. What is the characterization of each party? If it's truly a co-owner on this asset, we're moving in the right direction. And the transfer of ownership, now we're moving in an even better direction. So in a sense, ultimately, the contract in Islam stipulates what it is we're actually doing and what we're prohibiting, what we're moving away from each other in this transaction. That's what makes it halal, number one. Think about the ends for having children. We have the ends to have a family, right? The means matter. Just finding your sweetheart and moving in and having children is not the prescription under Islamic fiqh. It is a process of what? A contract. So that's the key. And if you look at our contract, it does not behave at all like a lender agreement. It removes that essence completely out of the characterization of the parties throughout those 30 years.
Thank you, appreciate it.
You're welcome.
Assalamu alaikum. I just had a question for the brother with the mutual funds. And I was a little confused, and I've heard differences of opinion about the 33% liquidity, 30% liability to market share cap ratio. Can you just speak a little bit more about that 33%? And to my understanding, owning stocks is also owning partial ownership of the company. So is it then permissible if I wanted to go start my own company that I could use that 33% to take out riba-based loans to fund my own business, because it is essentially the partial ownership of a stock?
Bismillah. So I'm not going to answer the last question. I would encourage you to talk to your local imam or one of the Islamic finance scholars. There's a few in America, but most of them, as Hussam has highlighted, the Islamic finance experts in the world are part of AYOFI. There's about 30 of them. Sheikh Mufti Taqi Usmani is the chairman of it. But the criteria is something that they came up with. The beauty that I've continued to be impressed with our deen is that even though the Fiqh Council of North America, they weren't necessarily Islamic finance scholars, the criteria they came up with 35 years ago when we started, 36 years ago when they started thinking about it, was very similar to what IOFI came up with almost 20 years later with their criteria of 33% debt to market cap or debt to assets, or 45% in accounts receivable. So does that translate to, okay, can I now go and start my own company and also allow myself to do 33% debt? I think the criteria becomes different when it's a fully owned Muslim company. Like Guidance, it's a fully owned Muslim company. When they went to Freddie Mac, their contract with Freddie Mac had to be different than their contract with, or let's say, Chase's contract with Freddie Mac. The ulama made sure that contract with Freddie Mac was also 100% Sharia compliant. So when you are a Muslim company, the criteria becomes different. So I don't know that the first easily goes with the second.
But do you know if, like, for example, and maybe I should go, as you said, but if you would be held accountable for owning that part of that company that does have that debt liability?
I don't know. Yeah, I in all my presentations I do around the country, I never try to play the role of ulama. So, alhamdulillah.
So I have two questions, one for each. So for stocks, when you were talking about it, I know you were talking long term. So what's the ruling on short term stocks, like day trading, for example?
So overall, when it comes to stocks, we in our industry tell people that you should not be in the stock market unless you have a 5-year time horizon. 5 years is what we call long-term, minimum of at least 4, but really we're looking to get someone 5 years. And the reason for that is anyone that's buying and holding, which is what we do, you'll find that in our mutual funds, we very rarely trade out stocks unless they go usually from going from halal to being haram, or we really think the company's on a bad trajectory. And the reason for that is and this is for advice for everyone in the room, when you find people that are really hyped about their day trading, they're telling you about their good days. Rarely do people talk about their bad days. It's very similar to when people talk about their kids. They'll tell you they're in the honor roll and this and that. They won't tell you that to get there, they got suspended 30 times, and you'll never hear about that. So it's the same thing with stocks. You'll hear about people's good days. Be careful, because most people don't beat out good long-term mutual funds in their actual returns. So we don't do day trading. We're really a long-term company. Whether you can do it or not, just like I told the other brother, I try not to play imam. That would be something that you should ask your imam, inshallah.
And my other question, so for Islamic mortgages, do they have a plan for Muslim investors who would want to purchase a multi-family so they can rent it out to tenants and possibly build their income?
Absolutely, yeah. We do finance multifamily, I believe up to 4 units, and you can finance up to 10 properties as a homeowner. The one thing that's important to note is they all have to be residential properties. They cannot be commercial properties. That's a whole different ball of wax. Commercial financing is completely different than what the field that we're in. So yes, and we do provide that to a lot of our customers who are interested in diversifying or moving into real estate, which I think is a wonderful thing. I have to make a comment, because our marketing department would probably get on me if I didn't do this. We have a contest for everybody. If you want to sign up for it, they're giving away a lot of different things, like including an iWatch and a 50-inch TV. So information can be obtained there, and all you have to do is actually text guidance to a number. I'm not going to read you the number, it's a long number, but they'll have it there for you. So I did my part. We'll go back to the question and answers. You're welcome.
Assalamu alaikum. I have two questions for you really quick. The first one is, so like this year when interest rates just dropped 2%, and everyone refinances their house, then you get a profit off of it. Does guidance have a similar kind of refinancing on your utility rate so that you're not also just paying ridiculous? Yeah.
That's a great question. So last year in 2020, we had our highest level of refinances that we've seen in the last 19 years. So alhamdulillah, we had a lot of customers who were with Bank of America, Chase, and so on and so forth, sought us out because now it truly made financial sense because rates did drop as you had mentioned. So yes, refinancing is something we do. There's only one state that doesn't allow refinancing with cash out, and that's Texas, unfortunately. But that's a whole different, it feels like a whole different country. It took us, and just as an FYI to the group, it took us 3 years. Texas wouldn't permit us to provide our financing to Texans. And they rejected our applications and everything. And it took us 3 years, $250,000 in legal fees just to get our approach to them in a way they understood it and allowed us to finance. But anybody here from Texas, you can refinance, but the cash out is the hardest thing.
My second question is, so to get a loan on a house, for example, if I wanted to put a little bit extra on my down payment, I could loan myself money from my 401k. But that also comes with interest that I pay back to myself. I guess what's the guidance on that? Is it really like, could I do that?
So using your 401k as a means of obtaining down payment towards the contract. I know you said loan. We don't do loans, but the contract to establish ownership is permissible. And this goes in part with our guidelines. And our guidelines are quite complex, but they're there to ensure that we're not facilitating homeownership for people who are struggling financially or any of that thing. So what I advise you to do is to understand our guidelines in a little greater depth. I think we have an army of account executives back there, licensed account executives in the states nearing the Midwest here. Reach out to them. They know these guidelines better than I do because they change. And so they'll let you know what's permissible in terms of what you can get as a down payment. If it's a gift, it has to be a gift letter. If it's 401k, to liquidate your 401k or borrow from your 401k, then that's something that I know is permissible. So you're welcome.
I have a question for each one of you. Hopefully they're going to be very brief. About the guidance is I've heard this past several years from reputable scholars in this country some issues with when guidance sells your lender-held mortgage to a third party. So I think he touched a little bit on that and said that the contract is still different. It's not your regular. But what I've heard before is that essentially you're back to square one. You're dealing with the bank that's not going to honor the principles that guidance promised at the beginning. So if you could elaborate on that briefly,
Sure.
You want to answer?
Yeah. If it's related to guidance, I'll handle it. So the misconceptions roam like wildfire. People's misconceptions, I don't think come from a bad place. I think they come from a true lack of knowledge of the complexity involved in what we went through during those 3 years of R&D. And the complexity, if we were to hold a session on what transpired during those 3 years, in our discussions with law firms, in our discussions with Freddie Mac and Fannie Mae, it'd probably occupy a 2-day workshop to go through what those complexities look like. And you may be asleep halfway through the first day. Because the scholars who were involved asked all of these questions that all of you are probably asking or in your head asking. And I had a chance, alhamdulillah, to hear it directly from them. Because when they asked these questions, they were very specific. About Freddie Mac and Fannie Mae, people have a misconception that Freddie Mac and Fannie Mae, they're these banks. You're dealing with banks. Same thing. Number one, they're not a bank. Absolutely not a bank. But they lend you the money. They lend you the money, don't they? Number two, they don't loan money. They're prohibited from loaning money. So they're not a bank and they don't lend. What are they? They're government-sponsored entities created and chartered by Congress. The US government created these institutions to provide liquidity in a buy and sell method. A buy and sell method. Believe it or not, they didn't know they were establishing something that's actually permissible in Islam. But they were doing it for other purpose. They were doing it to create liquidity in the market. No financier will have on hand the billions of dollars required to finance homes of citizens across this great country. There's just not enough. So the structures are one thing, but then who actually has ownership of the structures, who actually can invest in the structures as a silent investor, is a whole separate thing called the secondary market. Freddie Mac and Fannie Mae are a bridge to the secondary market. So what they do, and what they've been doing, is buying mortgages. So if it's a $250 mortgage, their business is to, as long as the mortgage company has an arrangement with them, the arrangement has to do with one thing, that they meet the guidelines that Freddie Mac and Fannie Mae set. These are specific financing requirement guidelines, credit scores and employment history and so on and so forth. It's to reduce risk. If you meet that, then they will then look at you and say, okay, do we want to do business with you? Do we want to buy from you what you generate? And they've been doing that for decades. They buy from banks. They take those revenue generating mortgages, they pool them, and they sell them on the secondary market to major institutional investors. I'll give you one example. Germany, for example, has a teachers' union pension fund. So all the teachers in Germany they pay into their pension fund, but their pension fund doesn't sit. They invest it so that they have money when they retire. Where do they invest their capital? They invest in varying different investment vehicles. One, major one, is called the U.S. mortgage-backed security. U.S. mortgage-backed security. Issued by who? Freddie Mac and Fannie Mae. And what they're doing is they're providing liquidity, right? They're bringing their funds from these pensions, investing it in the returns. Now, if you're a Muslim teacher in Germany, your pension fund is being invested in something that you don't want invested, because primarily it's what? Riba-based mortgages. If the manager of your pension fund is buying MBSs, yes. But for us to sell to Freddie Mac is completely permissible. They agreed, and this was a huge breakthrough for us in those 3 years. There was a senior executive at Freddie Mac who was actually a Muslim, who said there's a Muslim market that's untapped, that is underserved and needs our attention. And this organization has spent 3 years developing something, we should pay attention to it. When we met with them and explained all of this to them, they agreed. Their legal counsel and our legal counsel went on for months, but they ultimately agreed to buy musharaka mutanaqqisa structured mortgages for the first time. So when they buy them, they take them, pool them, and they sell them to pension funds all over the world, whoever's willing buyer of these securities now. So that buy and sell, I'm going to give everybody a simple example of what that looks like in our day-to-day to make it easier, to at least process it a little bit better. If I owned a hotel with Amjad, and he and I brought, let's say I'm 80% owner of the hotel, he's 20%. And the hotel, as co-owners of it, generates what? A profit each month, right? It has expenses, but generates revenue and therefore generates expenses. Profit, we hope, right? Now, our hotel, it has a structure. It has laws, it has policies that institute Islamic law in them. We don't sell alcohol at our hotel. We don't sell pork at our hotel, okay? Now, I want to help other people. I want to replicate this. So I want a silent investor to come in, and I would like to sell a portion of my 80% to that investor. But under one condition. That silent is in capital letters. You're a silent investor. You don't change anything about this. So I can usher in all kinds of investors now. Buy a portion here, free up my cash, go help 10 other Amjads to actually create more hotels structured this way. That's what Freddie Mac and Fannie Mae really do. That's it. It's a buy and sell. They're not a lender and they're not a bank.
Thank you very much for the clarification. I never got it before today.
You're welcome.
My question about the investment, and please forgive my ignorance, but what I know is that 5% number of haram. My understanding, since I was born, is in Islam like a beautiful haram, a beautiful haram. So is this 5% kind of for those of you who don't understand Arabic, if something is forbidden in big amounts, it's also forbidden in small amounts. It's like alcohol. One drop is not halal. So I want to understand where the 5%, and again, I said, forgive me.
No, it's a great question.
Where does the 5%, is that an arbitrary number? Where does that come from?
Jazakallahu khairan. So that's an excellent question, actually. So when we first started, the ulama had that at 0, just like you're saying. And what happened is when it was at 0, we could only buy 2 companies in the market that had 0% of secondary. And now we have to remember, even though it's 5%, we don't buy companies that come close to 5%, which is why the number is less than half of 1%. It's closer to 0.3. That's how little the number is. But the ulama first started with 0. When they realized a mutual fund needs between 30 and 60 stocks. Because the point of a mutual fund is to give the average Muslim or the average consumer the ability to diversify without having to buy the individual stocks. Like if one of us wanted to go out and buy Apple, let's say, I think Apple's about $300 right now, and we only had about $100, we couldn't do it. But if you bought our mutual fund, you would own a little bit of Apple and you would be able to get 2 shares in our mutual fund with the same $100. So because of the fact that we're trying to make it more accessible, we're trying to make saving and Muslims get some returns, the ulama did come up with this, not from nowhere, but similar to how, the 33% and the 45%, one of the examples of where they come up with this from the time of our beloved Prophet Muhammad sallallahu alaihi wasallam, and the examples of history is, we know in fiqh, if we are looking for tahara water, that if 2 of the 3 qualities of the water is intact, then we're still allowed to use it. So some of this is where they have derived this from. And we should know that this isn't just any scholars. Really, the top 30 or so Islamic finance scholars in the world have got together, and they're the ones that said, hey, this is the standards. This is, and some of it might be, more recent rulings. They might not all be from the history. So, but it comes from qualified, mashallah, Islamic scholars. So, wa yakum.